Welcome back, everybody. Time for today's three-stock lunch here with our trades. Jerry Castellini, President, Chief Investment Officer with Ark Management. First up, let's go to Tesla. Wall Street continuing to cut price targets on the stock. Fresh round of warnings on the first quarter deliveries numbers. EV manufacturer, one of the very few underperformers among big tech stocks so far this year, down about 27%. Jerry, your trade.
Yeah, so Tesla, I would put in the same category as Apple, two worst performers of last year's Mag 7, and they're actually even been kicked out. So there certainly isn't a lot of excitement there anymore. And when you think about it, both of these stocks have kept away from investors their real strategy and what they're doing in AI. If we knew more about them, it would be easy to conclude that both should stay as underperformers. But think about Tesla for a minute. The expectations now for deliveries have been cut. China is not a surprise on the upside anymore. It's a big negative concern. Stocks pulled in. They just raised prices, so that market might be stable. But more importantly, they're most likely going to have a very scary on the upside announcement at some point on their AI application. And it'll be wrapped around this self-driving aspect that they've developed. We don't know if it's going to come soon, but we would very much expect something here in the next maybe even 3 weeks, just hinting at where they could go. And you would not want to be on the wrong side of Tesla when they're now applying that type of technology to on-the-road driving.
So you think you would say buy this here in light of the fact that you think something's coming big on AI?
So from a tactical perspective, I would let the quarter come in the next few weeks, let them report, let them give you potentially more bad news, and take that as my entry point. We don't own it right now. We're looking at it very closely. Mm-hmm. And if we see any more weakness in it, given the upside that they have, that would be a great time to start buying. So I'm a hold. Okay. We're going into earnings and buy regardless.
Okay.
Well, shares are up about 1.5% today. And next up, Merck. The company is scoring a major drug approval for a rare life-threatening lung condition. Shares of Merck up over 4% today. Jerry, what's your take on this one? Now 5%.
Yeah, I'd say follow the crowd here. This is a unique therapy. No one has it. This is probably a $20 billion market. Merck has a hole to fill in their pipeline. And the fact that this is going to be on the market now and help fill that, we think that's going to lead to a higher multiple for the stock, and we think it'll do a lot better.
All righty, let's move on to, I guess it's RH Company, formerly known as Restoration Hardware. It's on deck to report earnings after the bell today. Your trade here, Jerry.
Yeah, so this one, to me, is a sell. It might have a little better than expectations, but the reality is these guys are selling fixtures and furniture. That was the pandemic cycle. Both of those things are hard to consume. It would take quite some time to go through another cycle like that, which means they're more likely to have earnings disappointments over the next 2 to 3 quarters. So we would fade that and look more at a consumable name in the home sector, more like a Home Depot.